Hello everyone, welcome back to my YouTube channel and I hope all of you are doing great. So today's video is not going to be the typical technical analysis video. Today I'll be reviewing the Q4 results of the 4 companies that I'm currently holding and I see value in them. We'll be analyzing the Q4 results of each of these companies in detail and we'll see how they performed and what are the future prospects of all these companies. If you enjoyed the video and you want me to make more such videos, then you can tell me that in the comment section. And if you have any doubts also, then also you can tell me in the comment section. So let's get started with the video and the 4 companies that I'll be reviewing today. And disclosure, I personally hold these 4 companies in my portfolio, and this is not a recommendation. I'm not a SEBI registered analyst, and any stock discussed here is not a buy or sell recommendation in any way. This is just for educational purpose to help you understand how you can analyze the companies, how you can review the results of the companies that you hold of different sectors. So these are the 4 companies. One is the Equitas Small Finance Bank, second one is the Piramal Enterprises, third one is the SJS Enterprises, and fourth one is Gravita India. So let's get started with the video, and the first one I will be reviewing is the Equitas Small Finance Bank. So it's a small finance bank. So the difference between a bank and a small finance bank is just that the small finance bank have the most of their loans. They need to give around 75 to 80% of their loans to priority sector, which is the small businesses, MSME loans, or the agricultural loans to small workers, those kind of loans that they have to give. So that's the basic difference between the bank and the small finance bank. So let's get started with the video. So as you can see, this is the advances or the loan book of the company. So the current loan book in the financial year 22 is around 20,597 crore, and the yields the company is making, the yields are coming down from FY15 to 22, and as you can see, the net interest margin, which is like the operating margins that the other companies have, like how much money they are making, it has also came down from 10.70% to 8.54%. But here, focus on the loan portfolio, overall loan book. So they offer mainly 5 type of loans: microfinance, small business loan, vehicle finance, MSE finance, and NBFC finance. So as you can see, in 2015, the majority of the portfolio was in microfinance, which is a very risky sector, and these loans are very risky, and the NPAs are really high in this sector. And as you can see, fast forward to 2020, now the microfinance book has not grown really much. It is around 17-18% of the overall advances, and this segment of small business loans, like to businesses, like to shopkeepers and other small businesses, like working capital, mainly the working capital loans kind of loans, it has grown from like the small portion to, as you can see, majority of the loan book is now the small business loans. And similar is the case with the vehicle finance. It has also expanded really well, and these MSE finance and NBFC finance constitute a small part of the overall loan book. And if we look at the liability franchise evolution, that means where they are getting money. So as you can see, the CASA, that is the current account, and the saving account has expanded really well and a lot. As you can see, it is around more than 50% of the overall liability franchise. And amongst it, as you can see, mostly is the retail term deposits and the bulk deposits. As you can see, this was around 3,323 crore was bulk deposits, and it has came down to around 2,000 crore. And CASA was around 1,638 crore back in FY18, and now it has expanded to 9,855 crore. And as you can see, the cost of fund has been continuously declining. In FY18 it was around 8.36%, and now it has declined to 6.58%. So the NIMs are stable, kind of stable, like it has came down from 10.70% to 8.54. But as you can see, the same way the your cost of fund is also coming down, so the rate at which they are picking money has also came down, so the interest outgo is less. And let's look at the key ratios. So as you can see, from quarter 4 of FY21 to quarter 4 of FY22, the cost of funds has declined from 7.20% to around 6.20%. That is around decline of 1%. And if you look at the net interest margin, it has expanded from 7.57% to 9.12% in from quarter 4 FY21 to quarter 4 FY22. And if you look at the ROA, that is a really important metrics in the banks. If you are analyzing banks, then the higher the ROA, the better. That ROA is the return on assets, and what assets do bank have? Money. And how much return are you making on that money is your return on asset. And as you can see, it is around 1.83%, which is really good. And the credit cost, like it simply means like how much money you can lose, kind of something like that, if I have to explain it in a simple way. So it is around 2.45%, so it is stable, right? Last time it was around 2.20%, and in quarter 1 FY22, when the things were bad and the NPAs were really high, so the credit cost went up to 3.36%. And if you take a look at the GNP and NNPA, that is gross non-performing assets and net non-performing assets, means the loans that the bank is not receiving EMI and or the principal amount. And net NPA is when the bank have made provision, like they have set aside some money from their profits in case the account becomes a lost account, like if the money never comes back. So it peaked around in quarter 2 of FY22. The GNPA was around 4.64%, and it has came down to in quarter 4 FY22 it is around 4.06%. so it peaked around in quarter 2 FY22, and last year it was down to 3.59%. so it is currently up a bit if we take a look at the year on year. And the provision coverage ratio, it has continuously declined, which is although not a good thing, but the banks mostly have around 45 to 50 to 55%. Some banks have really good provision coverage ratio around 70-80%. And it simply means the provision that you have, the money you have kept aside for the loans that could go wrong, and how much you are able to cover that. And the next is ROE around 12%, which is a good number, and it can go to up to 15% or 16% in future. It is easily possible. Look at the now let's analyze the advances, that is the loan the bank is giving. So as you can see, the microfinance has really not grown much. It is up around 21% YOY, that is means year on year, and of the total loan book it constitutes around 19%. So in quarter 4 FY21 it was around 3,236 crore, and right now it is around 3,907 crore. So it is up like 700 crore something. And if you take a look at the small business loans and the home loans, so it is 46% of the overall loan book, and it has grown 19% from around 7,971 crore in FY21 quarter 4 FY21 to 9,522 crore in quarter 4 FY22. And within the small business loans, the housing finance has grown from 959 crore to 1600 crore, which is a jump of 71%. So the housing finance sector, the overall in many banks, like if you look at the HDFC Bank, the ICICI Bank, and any bank, you can see the housing finance loan book is growing really well. And if you take a look at the vehicle finance, so it is up around 11%, not much, from 4,530 crore in quarter 4 FY21 to 5,047 crore in quarter 4 FY22. So it is the 25% of overall book, and the new commercial vehicle portfolio has gone up 19%. And if you take a look at the MSC Finance and NBFC Finance, they both have declined -1% and -3%. So, and the overall loan book is up from 17,925 crore to 20,597 crore. And if you take a look at the asset quality trend, I already explained NPA that peaked in the Q2 of FY22. The NPA was around 4.64%, and if we take the full figure, that is around 880 crore, and the net NPA was around 2.37%, which is stable at 2.37%, and the gross NPA is down from 4.64% to 4.06%. And if you analyze the NPA additions during the period were a bit high, around 400 crore new additions, and the upgradations were also okay, around 109 crore additions, and the recoveries were good if we compare from the previous quarters. If you look at the Q4 FY21, the recoveries were around only 42 crore, and this in this quarter it is around 113 crore. So things are definitely improving. And if you read this note here, the 70% of the additional NPA were from restructured pool, mean the loans they had restructure, and the restructuring basically means the changing the tenure and the EMI of a certain loan. Like if you can't pay EMI right now, they will extend your EMI, or maybe you have to pay less EMI this month, or maybe more next month, that. And the write-offs were a bit high if we compare from the previous loans. Write-offs are basically you have you have done the 100% provision for that certain loan, like you are removing it from the balance sheet. You may recover it later, but you are removing it from the balance sheet. So if you look at the closing gross NPA balance, that is around 837 crore, down from 880 crore. That was the peak in Q2 FY22. And this is the restructured. As you can see here, the total restructured loans are around 1500 crore, and maximum of them is from the commercial vehicle segment. And you can see the different bucket from 1 to 30 days, 31 to 60, and 61 to 90 days, and how much of it is NPA. So the max restructuring has been done for the vehicle finance segment, and the overall restructured pool is around 1500. And as you can see here, 73% of the high risk portfolio is secured, meaning they have some kind of collateral. And historically, loss on write-offs or write-offs is less than 35% of the advances. So no further stress in an asset quality beside RSL pool, and this is only around 0.18% of the total gross advances. So this is the total risk around that we have from 1 to 90 days DPD, that is from the people who haven't paid any EMI from 1 to 90 days. And this is the provisioning policy, as you can see here. So as you can see, for COVID restructuring, also substandard assets, the Equitas has done 100% provisioning, and they have done like more than the regulatory requirement. They have done the double or excess provisioning from the regulatory norm. That is like they have done the double restructuring as compared to the regulatory requirement. And if you look at the funding profile, as you can see, the term deposits are down from 10,705 crore to 9,000 crore, and the CASA is up from 5,614 crore to 9,855 crore, and the cost of fund is down 1% from Q4 FY21 to Q4 FY22. So as they collect more CASA, and if they are able to retain this CASA, they can lower their cost of funds, because as compared to the if you raise money through bonds or something, you have to pay higher interest as compared to the on your savings account or the current on the current account. It is 0% interest. So the more CASA, the better. And if you look at the digital initiatives that the bank has taken, so they have partnered with the NeoX for digital banking to open the account, and they have opened around 13.8 lakh accounts, which is around 343 crore. And through Grow also, if you use Grow app, you can do an FD through the Grow app, and there is option of Equitas also. So they have raised around 800 crore through that route, and around 20 lakh new cards were issued, and 6.8 crore transaction, which has the total value of 2,433 crore. and in FASTags also they issued new 1.26 lakh new FASTag, and the total value is around 500 crore, and in micro ATMs, as you can see, 5.3 crore transactions, and this is the total value, that is 15,500 crore of the total value of that transaction. So next company we are gonna take a look at is the Piramal. So Piramal Enterprises has two businesses, one is the financial service business and one is pharma business, and we are going to take a look at both of these businesses. So this is the key highlights. As you can see, if you take a look at the financial services business, the total asset under management is around 65,185 crore. This includes the acquisition of the DHFL Finance, and it is up around 33% year on year. And if you take a look at the retail and wholesale loan book mix, that is around 36-64, means the 36% of the overall AUM or the loan book is in retail. So here is the total number. The total retail book is around 21,552 crore, which is up 306% year on year. And the new loans that were given, the disbursements in Q4 FY22 were up 100%, and the total value is 1,480 crore. And if you look at the overall gross net NPA and the provisioning of as percent of overall AUM, so the gross NPA is around 3.4% and the provisioning is around 5.7% of the total AUM, and the cost of borrowing has reduced around 170 basis point YOY. And if you take a look at the pharma, the FY22 revenue growth was around 16%, which is not much, but it is okay. The consumer healthcare business grew around 48%, and the complex hospital generics business grew around 20%, and the CDMO growth was a bit lower, around 10%. And the overall margin for the overall pharma business was around 18%. They are doing an expansion of $23 million at Aurora, and it is under construction right now. And let's take a look at one by one. First, let's take a look at the financial service business. So as I told you, the retail lending and the retail AUM currently is around 21,550 crore, which is post DHFL acquisition. And currently they have retail off balance sheet assets, meaning they are earning fee on this this whole figure, that is around 18,747 crore. They are not handling these loans, but they are earning fee income on these loans. And if you look at the wholesale lending, that is the real estate and the other, like to loans to the builders or the firms, like that, not to the retail, like not to the people. So it is around 43,633 crore. And if you look at the life insurance, and the gross written premium is around 1,099 crore. So it is a joint venture with Prudential International Insurance Holdings. So let's first take a look at the retail lending. So it is 4x if we compare to March 2021. Because of the DHFL acquisition, it was around, before it was around 5,303 crore, and currently it is 21,550 crore, 52 crore. The off balance sheet retail assets are down from 20,000 crore to 18,000 crore, and they are earning the these assets are managed by PEL and they are earning fee income, but the risk is not on the balance sheet of the Piramal. So they are building a multi-product lending platform, and as you can see, they are doing affordable housing finance, mass affluent housing finance, and the average ticket size is around 18 lakh, and the yield is around 11% in this segment. And in MSME secured, they are doing secured loans, meaning they have a collateral like the secured business loans and the loan against property, and average ticket size in this segment is 21 lakh, and the yield is around 12.3%. and the used car, they are also doing used car loans, and the average ticket size is around 4 lakh and the yield is around 14.3%. and MSME unsecured, meaning they don't have any collateral, so it is a high risk product. And they are doing also merchant BNPL, meaning buy now pay later, which is not a really good product in my view, in my opinion, and I really don't like it. But the yields are high, although risk is very high in this segment. And the digital unsecured, meaning the digital loans through app and all of that stuff, personal loans, and the yields are high, and the overall yield is around 13%. And if you look at the disbursement, so the retail disbursements, meaning the loan they had given in Q4 FY22, is up 100% quarter on quarter if you compare it with the Q3 FY22, and 267% year on year. And they also acquired 132,000 new customer in the quarter itself, and post the DHFL acquisition they got around 10 lakh customers. So they also doing digital finance, like giving loans through app, small personal loans, and the AUM up from 10 crore in Q1 FY22, because they started in Q1 FY22, to around 332 crore. So they are doing aggressively, like this digital lending, they're running behind it aggressively, which I really don't like because it's highly risky, and AUM is around 333 crore. See the 36 seconds least time taken for disbursing a loan. So you can guess what kind of due diligence they are doing, like what kind of loans they are giving in this segment, and I really don't like this segment, the digital segment especially. They also acquired a 10% stake in Early Salary, which is one fintech which provides pocket loan, personal loans, checkout financing, salary card, and all of that. The loans of around 30,000 for 3 to 24 months tenure, and the AUM of the company is around 1,000 crore, which has grown from Q2 FY21 to Q4 FY22, that is around 6.2 times, and disbursements is around 4,170 crore. Total customers, active customers are around 4,40,000, and the return on asset is around 1.7%. So it is still the same view, it is really risky, and I really don't like this segment. And if you look at the asset quality of the retail portfolio, so the GNP is low, around 1.1%, which is really low. HDFC has this kind of GNPA, which is a good thing, but let's see the kind of loans they are giving, how it turns out. And the most of the loans are housing loans, around 63% of the portfolio for the completed projects, and 24% is for the under construction, the houses that are currently building. And the total provision as percent of retail loan is around 1.3%. Now let's take a look at the wholesale lending. So they have been continuously reducing their AUM of the wholesale, that is the loans to builder and all of that. So it is down from March 19 to March 22, around 3-4 years. In 4 years it is down from 51,436 crore to 41,928 crore, which is a reduction of 10,000 crore. And the exposure to top 10 account is down from 18,000 crore to 12,777 crore, and no single account accounts for more than 15% of the total net worth. And if you look at the areas divided by areas, so the 25% is in Bengaluru, 40% is in Mumbai, and 10% Pune, 14% NCR, and 10% in Chennai. And if you look at the asset quality, so asset quality is really not good. The stage 2 assets, meaning the people who haven't paid money for 60 days, is up around 1,000 crore. As you can see here, this includes the additional provisioning of 822 crore. So they had to do the provision of around 1,000 crore, amongst which it is around 888 crore provision and interest reversal of 215 crore. So the NPA is high in wholesale segment as compared to the retail segment. There the gross NPA was around 1.1%. Here it is around 4.6%, and the net NPA is around 2.1%, which is high. And the provisions are also high, around 7.9% of the total wholesale AUM. So I really don't like the wholesale business. That's why I'm not really interested in the financial business services segment at all. And if you look at the life insurance joint venture, so it is doing kind of okay. Total embedded value is around 1800 crore, and solvency ratio is around 404 crore. Total branches are 134, and the Piramal holds around 50% in this joint venture, which is the majority stake. So the persistency ratio is really good, around 98%, 78% for 13 months. And here is the whole P&L summary of the lending business. So the interest income this quarter was around 1982 crore, which is down from the previous quarter but up year on year. And the interest expense was around 1200 crore, which is down quarter on quarter but up year on year. And fee income was up quarter on quarter and year on year also. So the pre-provisioning operating profit is down quarter on quarter due to the less interest income, and the provision they had to make extra provision of 822 crore for the stage 2 asset, due to which they had to report a loss, and the profit after tax is around minus 321 crore, which is the loss of 321 crore. So mainly because they had to do the provisioning of 822 crore because some wholesale assets quality had turned bad. And ROE tree of the lending business, so the ROE is this time around negative 2% and the ROE is minus 7.4%. Last quarter it was okay. The ROA was good, around 2.6%, and the net interest income is really low because the cost of fund is very high for the Piramal. As you can see here, the cost of fund is around 8.2% for the whole year, and for this quarter it was around 8%, and the interest income is around 11%. So the 3% net interest income, it is kind of low for the risk they are taking if we compare it to the risk they are taking. So this is the stage wise breakdown of assets and provisioning. So the total asset in stage 1 is around 55,000 crore. There was jump of 1000 crore, around 1000 crore for the stage 2, and stage 3 like 100 something crore for stage 3. And the provision, as you can see here, the provision they are holding, like the stage 2 provision is really up from 545 crore to 1380 crore, which is a massive jump quarter on quarter. And the provision coverage ratio for the stage 3 assets is around 55%, and the net NPA is around 1.6%, and the total provision is around 5.7% of the overall, and provision as of percent of GNPA is around 168%, which is a good thing. So next, if we take a look at next is the pharma business, and as you can see it is really doing really good. As you can see here, from FY12 it was around 1900 crore and it is up to 6701 crore in FY22, which is the revenue CAGR of 13% and the EBITDA CAGR of 24%. And as you can see, the EBITDA margins has expanded from 7% to 18%. They are down year on year because of the challenges due to the COVID and all of that, the logistic challenges and all of that. So if you look at the year on year growth, it was around 16%. Total pharma revenue is around 6,701%, of which 59% is from CDMO, 30% is complex hospital generics, and 11% from Indian consumer health. And if we look at the key markets, 41 is from North America, 23% from Europe, 4% Japan, 22% India, and 10% others. So the CDMO growth was low, around 10%. Complex hospital generic growth was good, 20%, and the Indian consumer healthcare growth was really good at 1400%. And the EBITDA margins were down from 22% to 18%, but up for the quarter. For the quarter, it was around 22%, and the total EBITDA is around 1206 crore. So if you look at the segment wise revenue, so look how massively the CDM has scaled up, the revenue CAGR of around 11%, which is not really impressive, but they have a really good track record. And 64% revenue is from commercial products, 26% from development services, and only 4% from discovery services. So they are doing they acquired 33% ownership in Yapan Bio, and they are doing expansion of $23 million in Aurora, and another expansion of $74 million for the antibody drug conjugates. These are used for cancer and the API, and for the API. So the total projects are up from 156 to 188, and 34 projects in phase 3. So around, even if the 50% projects commercialize, so that would be around 17 projects or 17-18 projects that would go into commercialization, which will lead the future growth for the CDMO segment. So 46% of the revenue is coming from the phase 3. And look at the complex hospital generics, the total CAGR is around 17%, which is really impressive, and year on year growth was 20%, and they have a really good portfolio, and the most of the revenue is coming from the North America, and the product is inhalation anesthesia. Like whenever in operation theater, like for any operation you need anesthesia to numb any person or the part where you want to operate, so that's what they manufacture. So the entry barrier is really high in this business, because you won't get the permission from US FDA easily unless you have you follow the complete rules. Look at the Indian consumer business. So it is growing at a CAGR of 18%, up from 138 crore in FY12 to 714 crore, and the year-on-year growth was really impressive of 48%, and the maximum revenue is coming from the eyeglasses and the skincare. So the power brands, which is the brands they have, like lactocalamine and other brands like that, 57% revenue came from that, and around 15% of the total sales was from 40 new products that they launched in year FY22. So you can see the brands they have. One is Ceradon, Littles, iPill, and the lactocalamine. And look at the portion of the power brands, it is up from 260 crore to 424 crore, and the media spend is also up around 19% of the overall revenues of this segment, around 129 crore, which is really high. So here are the P&L and the of the both pharma and financial service business. So the majority contribution of the overall revenues for the Piramal Enterprise was from pharma business, and of which 33% is from CDMO, 13% from complex hospital generics, and 5% from Indian healthcare business. And if you look at the EBITDA, so the financial service business reported a loss, but the pharmaceutical business reported a 478 crore of EBITDA positive. So the next company we are going to take a look at is the Gravita India. So Gravita India is mainly in the business of the lead and aluminium recycling. They also have started plastic recycling and the rubber recycling also. These are the few details about the company. For recycling verticals: lead, aluminium, plastic and rubber. They have total 12 recycling plants, 1400 plus global touch points, and the 42% of the revenue is coming from value added products, and the total capacity is 2.5 lakh metric tons, and capacity utilization is around 67%, and the 30% of the overall capacity is in the overseas, like in Africa and America, and one factory in Sri Lanka also. They collected the total scrap of 1.80 lakh, and they have a healthy order book of around 60,000 plus metric tons. So these are the financial highlights. The last 5-year revenue CAGR is around 26%, and the EBITDA margins have remained consistent around 8-9%, and the PAT has grown by 34%, and the 75% profit comes from the overall business, although only the 30% of the capital is deployed there. You can see here the PAT and the margins. PAT margin is around 6%, which is up from 3% in FY21. And look at the capital employed. The most of the capital employed is in the Indian business, and the majority revenue is coming from the Indian business, which is around 64%, but the 75% of the profit is coming from the overseas business. So these are the highlights, quarter highlights of Q4 FY22. The volume was up around 23%, revenue was up around 52%, EBITDA was up around 102%, and PAT was up around 94%. So the EBITDA margins reached 10.95% for the Q4 FY22, and the total revenue was around 666, which is the highest quarterly revenue, and the PAT margins were a little bit down from 7% to 6.20%, mainly because of the this EBITDA per ton decrease in aluminium, which is down from 28,000 to 22,000. But there is a jump in the plastic segment, which is continuously growing. If you look at the Q4 FY21, EBITDA per ton for plastic was around 5,895, which is up to 19,416. But the plastic segment is currently really small, so it really doesn't add that much. So the 36% of the revenue was from overseas business, but the 73% of the profit was from overseas business. And this for this quarter for FY22, the 39% revenue contribution was from value-added products, and the 50% domestic scrap was collected for Indian plants domestically, like from within the country. So these are the value-added products that they manufacture: customized lead alloys, lead sheet, lead bricks, lead balls, lead oxide, red oxide, plastic granules, PET flakes, food grade, which is currently not allowed in India, but in America it is compulsory. And for the year, the percentage revenue of the value-added product was down to 42% from 44%, which is still really high. And they also started hedging back in 2016, and in 2019 they also started hedging the inventory to save them from the commodity price fluctuation, because the lead is the main product, and as you can see, the price has been going up and down. So it was $205, and it came down to $1,867 in FY21. So in 1 year, in FY21, they had to report 1.5% of the loss, inventory gain or loss. So currently now they don't have any kind of inventory gain or loss because of the hedging. So these are the customers. You have here Hitachi, Amara Raja Batteries, Tata, KEC, KEI Wires, TVS, Sandhar Technologies, Polycab, Panasonic, Exide, Asian Paints, Honda, Luminous, Tata Batteries. So they have really good big companies as their customer. And this is the vision the company have for 2026. That is, they want to enter new recycling verticals like e-waste, lithium, rubber, copper, paper. They have started the rubber in one of their African plant. I can't remember the name of the country. Maybe it was Togo. I really don't remember really well. And they are targeting 25% revenue CAGR, 35% profit growth, 25% plus ROCE, which is really good, 50% revenue from value-added products, which is around 42% currently, and 25% from the non-lead business, which is the aluminum, plastic, rubber, and other segments. And the next and the final company we're going to take a look at today is the SJS Enterprises, which is a proxy to the auto cycle revival. So a little snapshot of the company. So they are one of the leading aesthetics player. Decorative aesthetics means the logos that the company has, you know, the on the screen, the display that they have, and other stickers and all that are on cars and bikes. So they manufacture that kind of stuff. So they have 11 product categories. They also added the chrome plated. They acquired a company named Exotech for the chrome plating business, because if you look at the companies, cars today, many are coming with the chrome bumpers and, you know, some stuff like that. So they total supplied 123 million parts last year, total 6,000 SKUs, and they export to around 20 plus countries. So they do design to delivery complete, and the revenue was around 3,698 million, which is around 369 crores something. So if you look at the Q4 FY22, so the industry, two-wheeler industry, was down 21%, and for SJS it was down 5.3%, and in passenger vehicle, which is your four-wheelers, and it was, the industry was up around 2%, but for SJS the revenue was up around 52.3%, and the overall combined SJS had the volume growth of 9.4%. And for the full year FY22, the industry declined. The industry has declined a bit, but SJS had the total volume growth of around 15.5%. As you can see here, the whole industry declined 0.2%. So the revenue was up for the year because they had done an acquisition, that is Exotech. They have the chrome plating business, due to which the EBITDA margins came down. If you look at the alone standalone SJS business, the EBITDA margins were around 31%, but for the consolidated entity, it came down to around 26.3%, and the PAT margins also came down to 14%. For the standalone business, the PAT margins were around 19.4%. And the ROC also declined a bit, mainly because of the acquisition, which because the chrome plating business has low margins around 11-12%, and it will take a bit of the time to expand the margins. So they are currently debt free. So free cash flow to PAT conversion is really nice at 90% of the PAT is converted to free cash flows, and they don't have any debt, and the free cash flow is really good. It came down a bit because of the Exotech acquisition. So these are the financials for the company. So the revenue was around 1041 million rupees, and the EBITDA margins were down quarter on quarter from 28% to year on year. The margins were down from 28% to 25%, mainly due to the Exotech acquisition, and the profit was around 153 million, which is around your 15 crore. So this is the future guidance. They are expecting a 25% organic growth. They will be doing a 100 crore capex over 18 to 12 months, funded by the cash flows of the company and not taking any debt, and targeting 20% ROCE. They are doubling the capacity of the chrome plating business from the current capacity can do 130 crore of revenue. They are expanding it to 300 crore. They are also strengthening their sales force in market of Turkey, Brazil, Argentina, and other markets also. Next, they are doing, like, if you look at the EBITDA margins of Exotech, it is around 11-12%. And there was the revenue growth was really good for this business, around 50% year in year. So it will further lead to the growth for the overall business. So this is the FY23 outlook. The two-wheeler industry domestic volume growth was down 10%, and next year they are expecting a 15% volume growth, and the SJS contribution from the two-wheeler business is around 43%, which would be really positive if the whole industry grows. And from the passenger vehicle, it was positive 13%, and they are expecting a 19% volume growth next year also. So the current order book to be executed in FY23 is 80 to 85% of the FY23 forecasted revenues, and the PAT would be 33% year on year growth. So they are making some changes. So they have one Sanjay Thapar, which is their CEO. He would be playing the executive leadership. He would be shifting on the board, and they are looking for new CEO and CFO. So that was it for today's video. If you enjoyed the video and you want me to do more such videos, then please do tell me in the comment section. And if you have any doubt related to any of these 4 businesses, you can ask me in the comment section, or you can DM me on the Twitter. I will leave the link of my Twitter account in the description. So have a good day. Goodbye.